Bitcoin OTC trading. How I turned a small trade into a loss. A real trading experience. Good morning everyone. Welcome back to Tom Trading. I hope you are doing well and learning something new every day. In today's video, I am going to share a real trading experience where I lost money within just a few minutes. This is not a success story, and it is not a strategy that guarantees profits. Instead, it is a lesson about why trading should always be done carefully and responsibly. Before we begin, if you enjoy educational trading content and want to learn more about the financial markets, consider subscribing to the channel. I regularly upload videos about trading concepts, market psychology, and risk management to help beginners understand how trading works. Now, let's get started. Today was looking at the Bitcoin OTC market. Some trading platforms offer OTC trading outside normal market hours. Every platform works differently, and price movement in OTC markets can behave differently from regular market sessions. It is important to remember that no one can accurately predict the market every time. I decided to open a trade with $50. Before placing the trade, I carefully looked at the price chart. I noticed that the market had been moving up and down several times within a short period. Looking at the recent candles, I personally believed that the price might move upward next. This was only my own opinion based on what I was seeing on the chart. It was not certainty, and there was no guarantee that the market would move in that direction. After making my decision, I placed a $50 trade expecting the market to rise. The trade was confirmed successfully. Now all I could do was wait and watch the chart. At first, everything looked normal. The price moved a little higher, then slightly lower. This kind of movement is very common in trading. Markets rarely move in a straight line. After a short time, I noticed something that every trader experiences at some point. Instead of moving upward as I expected, the price started moving downward. My trade slowly entered a losing position. As the candles continued moving lower, I realized that my prediction was not matching the actual market movement. At this point, many traders become emotional. Some people panic. Some people close the trade immediately. Some people hope that the market will reverse. Others decide to place another trade. I looked at the chart again. The market was still moving downward, and I noticed another trading opportunity according to my own analysis. So I decided to place another $50 trade, this time expecting the price to continue moving lower. Now my total investment had reached $100. My thinking was simple. If the market continued moving down, the second trade could perform better. If the market reversed upward, the first trade might recover. However, this was only my personal decision during that moment. It was not a guaranteed method, and it involved additional risk. Trading decisions made during emotional situations can sometimes increase losses instead of reducing them. After placing the second trade, I waited again. The next few minutes felt much longer than they actually were. The price continued moving. Sometimes it went slightly higher, then it moved lower again. Every candle changed the result of my trades. Watching live market movement can create emotional pressure. Many new traders think trading is easy because they only see successful trades on social media. In reality, trading involves uncertainty. No matter how experienced someone is, there will always be winning trades and losing trades. No trader wins every single trade. As time passed, I checked the expected payout. Even though one position looked better, I noticed something important. The total return would still not recover the full amount I had invested. I had invested $100. The possible return was around $90. That meant I was still facing an overall loss. Even if one trade finished successfully, the combined result would still leave me with less money than I started with. This was an important lesson. Increasing your investment after a losing trade does not automatically remove the loss. Every additional trade also carries its own risk. At the end of the session, my total return was $90 after investing $100. This meant I finished with a $10 loss. No one likes losing money, but losses are part of trading. The most important thing is learning from every experience. Looking back, I realized that I could have managed the situation differently. Instead of placing another trade, I could have accepted the first loss and waited for a better opportunity. Sometimes the best trading decision is choosing not to trade. Patience is one of the most valuable skills any trader can develop. Many beginners believe that every market movement must be traded. That is not true. Professional traders often spend much more time analyzing than actually placing trades. Risk management is just as important as technical analysis. Before opening any position, traders should decide how much they are willing to risk. They should never invest money that they cannot afford to lose. Financial markets are unpredictable. Economic news, global events, market sentiment, and many other factors can influence price movement. Even the best analysis cannot guarantee the outcome of every trade. That is why proper education is so important. If you are new to trading, spend time learning first. Understand how charts work. Learn about support and resistance. Study trend analysis. Practice with demo accounts if they are available. Build your confidence before using real money. Most importantly, never make decisions based only on emotions. Fear and greed often lead to poor trading choices. Creating a trading plan and following it consistently is much better than making quick decisions during market volatility. Remember that every trader experiences losses. What separates experienced traders from beginners is how they manage those losses. Successful traders focus on protecting their capital. They know that one bad trade should never affect their entire account. Discipline is often more valuable than finding the perfect trading strategy. Today's experience reminded me that trading is a continuous learning journey. Every trade teaches something new. Sometimes the lesson comes from profit. Sometimes it comes from loss. Both are valuable if you are willing to learn. I hope sharing this experience helps you understand that trading is not a shortcut to easy money. It requires patience, knowledge, practice, and responsible risk management. Please remember that this video is shared only for educational and informational purposes. It does not provide financial or investment advice, and it should not be considered a recommendation to buy, sell, or trade any financial asset. Always do your own research and consider seeking guidance from a qualified financial professional before making investment decisions. Thank you so much for watching this video. If you found this experience helpful, please like the video and share it with others who are interested in learning about trading. Don't forget to subscribe to Tom Trading for more educational trading content, market insights, and real trading experiences. Take care, keep learning, trade responsibly, and I will see you in the next video.